Daily news and analysis. We keep you informed and inspired.
This is World Today.
Gold prices are swinging sharply, while the appeal of the US dollar as the world's dominant reserve currency appears to be gradually eroding. Amid the growing wave of de-dollarization, could the Chinese yuan become a new safe haven currency? And are we already entering a multipolar era of the international monetary system? Welcome to World Today, the panel discussion with me, Anna, in Beijing. The US dollar index has recently fallen to a 4-year low, meanwhile driven by heightened risk aversion. Over the last couple of weeks, gold prices surged to a record high of $5,500 US dollars per ounce. But then it recorded its largest single-day drop in 4 decades, only to rebound days later with its strongest one-day gain since 2009, reflecting extreme market volatility and investor anxiety. At the same time, the Chinese leadership has emphasized that building a strong nation requires a solid economic foundation and a world-leading comprehensive national strength, economic, technological, and institutional. The version includes a strong currency, one that is widely used in global trade, investment, and foreign exchange markets with the status of a global reserve currency, supported by robust regulation and backed by a deep pool of financial and technological talent. Does de-dollarization force the world to rethink safe havens beyond gold? And where does the Renminbi stand in this shifting landscape? To explore these questions, we're joined by Liang, Professor of Economics at Willamette University; Chang, Associate Professor of Practice in Finance at the University of Hong Kong; Jiahe, Chief Investment Officer at Novem Technologies. Ladies and gentlemen, recently, gold has been swinging widely and the dollar index has dropped to a 4-year low. Professor Liang, let me start with you. Do you see this as just a short-term market panic, or are we actually looking at something more fundamental going on in the global monetary system?
Well, I think this volatility of gold and silver price, it's not just a temporary issue, right? We know the most recent episode, it was because gold price gained really tremendously, 65% increase in 2025, and then really reached a record high of 5,600 ounce in the end of January. And then came the really one day, right, on January 30th, when the gold price had a really single day largest fall since 1983. But then that was really very quickly recovered. And so I think the fall partly is due to the technical correction, right? Because simply that the price has gone up so much in a very short period of time, and partly because the gold commodity exchange raised the margin requirements. And so because a lot of purchases in gold was built on leverage, and so that increase in margin requirement had created this sort of deleveraging move. And so that's one of the reasons why the gold price fell so dramatically. On top of that, I think also the nomination of Kevin Warsh as the Federal Reserve Chair in some ways also boosted market confidence for the dollar, because he was considered as a traditional, more sort of hawkish central banker. So the idea is that once he take power, he will help to sustain the dollar value. And so I think it's, again, when the price is at such a high level without any, I would say, justifications from a fundamental value point of view, it is easy to trigger a fall. But that said, I do think that from a more longer term perspective, there has been this rising trend towards gold, right? Because gold is considered as a safe haven assets. And in the recent years, and especially months, we have seen a lot of geopolitical uncertainty and rising tensions, from armed conflicts to all these very erratic, trade policies by the Trump administration. So gold is now becoming much more a important sort of a hedging asset in this kind of environment. Then I think there's also even just a shift in terms of investment strategies from the private perspective, because there has been somewhat a positive correlation between equity and bonds, right? Which usually should not be the case. Now I think there's more sort of hedging to put some alternative assets in the investment portfolio, and that includes, crypto, gold, and rental income. So I think from a private investment perspective, is also a good hedging asset. And last but not least, I think central banks have been piling up gold for their reserves. Again, we can talk about the specific geopolitical reasons for that. But what we know so far is that the gold has now become, 18% of the foreign reserves. And at the end of last year, gold reserves exceeded the US Treasuries when it comes to, in the government reserves. And so I think in the long term, it seems that gold will continue to be in high demand. And so I think this recent price volatility could not sort of conceal that long-term trend, right? The long-term trend is growth. But I do think that volatility seems to be the trend as well. So there will be ups and downs, even though the general trajectory is moving upwards.
Professor Chang, what's your take on the recent swing of gold price and shift away from dollar reserves by nations? Do you see this as a short-term market panic or actually looking at something more fundamental going on in the global monetary system?
Thank you, Anna. I think my take on top of Professor Liang is that if we refer not the aggregate demand on the gold commodities, but because, if we're trying to comment about the recent volatility about the market, demand actually exceeded production. And if we're referring to the production volume on a yearly basis, roughly speaking, we're talking about high demand of close to 4,000 tons, referred to the estimate of the World Gold Council statistics of the U.S. gold statistics. These top producers among, for example, China, Russia, Australia, Canada, these commodities market have produced to support those demand over time. The short-term volatility, like Professor Liang referring to, some speculative transactions on the future contract, roughly speaking, if we refer to 2025, there were about 270,000 contracts per day, and that's slightly above average. So recently, we also seeing the open interest hovering around more than 400,000 contracts per day. So the short-term volatility driven by some speculation contributes to that. And if we're referring to any structural changes, definitely geopolitical diversification and fiscal imbalances, or to a certain extent, reserve reallocation, they are real. And think of a system of asset reallocation, and if we're referring to the risk premia or some of the work that I've previously done on spread valuations on the risk premia, these perspectives have proven that markets trying to manage their risk. And to a certain extent, the currency risk also embedded in these forward expectations. The M&M theory extension that market imperfection and transaction costs in international capital budgeting do take into all these aspects. And most important, looking at from the angle of structural change in sustainability consideration, fiscal imbalance exacerbate that. So drawing all these attentions, I do believe that the recent overreactions partly due to speculative and partly also driven by some structural changes on that.
Mr. Chen, do you agree with these assessments or do you see it differently? How would you describe where the current state of global monetary order stands right now?
Well, it is a very interesting question because we haven't really saw this for a long period of time. That the reason behind the phenomenon that gold price as well as things like silver price and copper price has been rising so much against the dollar is basically because in the global markets, not that many people are now trusting the dollar anymore compared with years ago. Because, Trump has been starting all these trade wars against all the countries. He's even talking about grabbing Greenland, which is never imaginable back 5 or 10 years ago. So people are starting to untrust the dollar at this moment. So people are rushing to gold. But if you look at the price of gold as well as silver, they're just basically too expensive because the current gold price is now around $5,000 per ounce. And if you look at what we call average production cost of gold mines, they are just slightly above $1,000 per ounce. So that means the price of the gold is actually much more expensive than it should be. I mean, an average price of, well, if you have the cost of $1,200 per ounce, and you consider the fact that gold is quite rare, that even with rising price, you can't have rising production, then the price of 2 to 3,000 is probably the maximum. But now we have 5,000, so that's basically too much, and it caused because people are not trusting dollar that much. But personally, I think they're making a wrong choice of selecting what is the safe asset, because in the world today we can't go back to the gold standard because the global economy is basically too much. So if we just go back to the gold standard like we did like 100 years ago, or maybe 80 years ago, what we will have is, well, a contraction of the monetary system, and we will have deflation because there is simply not enough gold, nor silver, nor even copper to fix the global economy today. So if you are rushing for a safe asset in the world today, and if you are not trusting dollar, I mean, you try to find places where you have, well, the most promising country and the most promising economic growth, and I think that actually means China. And if you come over to China, you can see the economic growth is stable. The country is always open to the global economy. We don't try to take Greenland at all. We are friendly with any country who is dealing with us. The Prime Minister of Great Britain has just visited Beijing, so it's quite a close relationship between China and Europe right now. So this is kind of really safe asset compared with gold from my point of view.
Let's delve deeper into this. As we earlier mentioned, many countries and investors have turned to gold. We've seen global gold demand hit a record highs of just over 5,000 metric tons last year, and the World Gold Council expects a strong demand to continue into 2026. But at the same time, gold prices have been swinging violently in just the past few days. Professor Liang, after this sharp rise and a sudden drop, some people are starting to worry about the valuation of gold. Has the core logic behind gold's rise changed?
Well, I think your question is about whether or not the strong interest in gold, right? This large demand in gold will continue. And I think there are a number of reasons. One is the sovereign governments are piling up gold to diversify, right? And I think for many of the governments, it's not the short-term profit that they're looking at, right? Because these governments, they don't operate as a financial investors, but they're more looking into sort of long-term interest. And I think given Trump's administration's aggression towards foreign sovereign states, especially after seizing the Russians' $300 billion of foreign exchange reserves, largely in dollar, I think this is a wake-up call for many governments that the U.S. is willing to weaponize the dollar system to its own advantage. So I think for the security reasons, I think many governments, especially outside of the Western orbit, Brazil, Poland, Kazakhstan, Uzbekistan, Turkey, China are the countries that really piled up a lot of gold last year for their reserves. And again, for investors' point of view, this U.S. exceptionalism, I think it's still playing, but really at a diminishing pace. And so I think in the past, when investors are having the 60-40 strategy, right, 60% in equity, 40% in fixed income, it used to work very well for them. But now, again, the concern about dollar debasement and the word about some of these assets move in the same direction. For that reason, they will try to find some alternative assets to diversify the risks. I don't think that having a sort of a gold standard in whatever the sort of renewed forms would really work well for the global economy. But I think the reality is that as far as, these sort of exchange reserves or sort of the currency system, is that we're not going to move back to gold, but we are going to move towards the more multipolar in terms of the currency system. So we have the US dollar, which I think the share of the dollar in the government reserves has gone down from 70% back in 2010s to now 56% as of third quarter 2025. So we do see the decline of the significance of dollar in that sort of more unipolar currency system. And the euro has gone up now to 21%. And then you have a bunch of other currencies, yen, Chinese yuan, Swiss franc, and others, and some sort of non-traditional reserve currencies. And you have this gold, and as well as, I think, SDRs. So the sort of dollar-centric system is gradually unraveling, and gold is part of the story, but it's not the whole story. But because of both at the government level and at the private sector level, there are these sort of a trend of seeking out gold as a safe haven asset, as a diversification asset. I do see that would support the demand for gold and therefore its price. But whether or not we're going to see this really fast rise in gold price, I think that is still debatable. But there are many financial institutions like Goldman Sachs or JP Morgan and other institutions, Deutsche Bank, that they basically forecast the gold price could rise to over $6,000 by year end. So I think that remains to be seen. One last thing I want to say is also when it comes to gold transactions, it is actually a relatively small market when it comes to trading volumes compared to the US Treasuries, right? So gold trading volume per day is about $227 billion, whereas Treasury is 5 times that. Now, a small transaction volume or the lack of liquidity means that any small changes, right, any small trigger could create a lot more volatility in this kinds of more shallow sort of markets. And so that's why I think, yes, the price of gold will continue to rise due to all this demand, but then the volatility is some fact that one cannot ignore.
That's a very important point. Let's build on that. Professor Chang, many say historically gold bull markets usually end only after major shocks like the Nixon shock or the Volcker's rate hikes. Looking ahead to 2026, do you see any event that could potentially end this gold cycle?
Right. I think the gold cycle, like my colleague referring to, obviously there is a paradigm shift on asset allocation from central banks to institution, private investors. And if we're referring to the physical production, it has plateaued while demand has grown modestly and leading to tight supply-demand balance and higher prices in the commodities. The future markets also amplify that through massive leverage trading and often detached from the physical fundamentals in the short term. But what we're discussing here, whether the gold would replace the dollar, while as Professor Liang referring to the treasury market still, or the dollars remain as the median of exchange and the unit of account. But its zero value role is increasing tested by policy divergence and political risk. So what that means is confidence and liquidity debt and not the nominal issuance and determine the value status. So to enhance this, also erosion parallels with how multinational corporations assess into foreign exchange exposures in their capital structures, not gold, in their capital positions. So incorporating, for example, the Fisher effect, how predicting interest rate differential based on expectations of inflation and currency depreciation, while the gold is maintained as purely on the demand supply driven, that influence the dollar versus the gold versus other alternatives. Another thing that I want to add is the sustainability at some depth in here, because dollars waning store value status ties to, for example, sustainable finance principles. And these principles often with increasing factors in the geopolitical risk. And that could undermine long-term value and preservation amid the transition risk. So I think the whole scheme of things would be illustrate how perceived the instability in one currency and can shift preference towards other alternatives, including gold, reinforcing the need for robust institution backing.
Professor Chang, if we look back at Bretton Woods after World War II or the unipolar moment after the Cold War, the dollar basically had no real competitor even today. So compared with that period, how has the dollar's role changed today, even slightly, as a means of payment, a unit of pricing, or a store of value?
Yes, as you pointed out correctly, now I think the global transaction starting to shift away from dollar, from the commodities like petrol transactions to other global trade. Another thing is what I referring to earlier. I think now the global environment is focusing on sustainability and shifting to recycle energy, which the currency of trade is yet to decide. So that could be in other alternatives or currency linked related. So I think there is a huge paradigm shift from the Bretton Woods to post-era situations and development. Of course, there are the new development and introductions of crypto-related currencies, such as, for example, earlier my colleagues referring to stable coin types of cryptocurrencies, whether it's just based on the US dollar or there can be other alternatives, like, for example, Renminbi as the underlying. So all these, I think they are like what's the political environment now driving to, any new orders in introduction of these types of backing instruments.
Mr. Chen, what has changed the dollar's role in your opinion?
Well, basically, if we look at the market of global currency, the value of one country's currency represents the global market's view about the future of this country, as well as the relation of this country with other countries. These are two very important subjects for determining the value of a country's currency. I mean, for example, if we have a hypothetical country that is very strong in its economy, but it doesn't trade with anyone else at all. If we have a country such as this, then its currency also has no value at all, because if you don't trade with me, we don't have much relation. Why do I need your currency? So that's the case. I mean, if you look at the dollar in recent years, the economy of the United States is still strong. It is still leading the global economy. It's the number one in the world. It's creating so many leading technologies and everything. I mean, it's causing problems, but if you look at the history of the United States, this is a country that is never short of problems. So it's overall speaking, its economic growth is still pretty robust at this moment, especially its high-tech sector. But the reason that global investors are not trusting dollar that much and now rushing to gold is basically because the relation between the United States and so many other countries are so bad at this moment. This destruction of relationship is quite unreasonable. If you look at the foreign relation between the United States and Canada is dropping. I mean, Canada has been a close partner to the United States for so many years. People even consider that they are one country in many cases. If you hold a Canadian passport and you cross the border between Canada and the United States, you don't even receive much check at all. And there is now a very bad relationship between Canada and the United States. And there is a bad relation between the United States and so many European countries. So with this worsening relation, even if the United States economy is still number one in the world, the global traders are losing the trust to the dollar. So they're trying to find something safe and they're rushing to gold. I would personally say rushing to gold is not a very good idea if you look at the long-term financial return, because we never go back to the gold standard, because gold is just too rare to support a rising global economy at about 2% per year. If you look at the growth rate of global economy, we're talking about a global economic growth of potential maybe 2 or 2.5% per year. And that means every 30 years, you're going to double the global economy. And if you use gold as a currency, it's not possible to double the reserve of gold by 100% in just 30 years' time. You just can't do that. So we're not going back to gold. So I'm saying if you want to find something safe, you look for countries with promising economic growth with open attitude to the world.
Then, building on that, let's delve into the renminbi's role and global expectation. So, what does the world actually expect from the renminbi? I'd like to hear Professor Liang's perspective first. Is it hoping for another dominant currency or just a more reliable option in a diversified system?
Well, I think for one is, as all the panelists have talked about, that the diversification, right, or these multipolarity, the optionality is what both private investors but also governments want to have. So I think it's inevitable when you look at the trend is that there will be the movement towards the more sort of multi-currency and multi-assets kind of world, right? And again, I agree with Jiahe. I don't think the sort of gold standard would ever work again, right, for the global economy, and it's not desirable. So I think the alternative is to have multiple currencies, local currency payment systems, and various currency compositions of your foreign exchange reserves. I see that is where the world is moving towards. Now, that said, I think the dollar so far, it is still in a very dominant position, right? It is still accounting for 56% of the global foreign exchange reserves. It is still about 54% of the export invoicing. It's done in dollar. And it's also accounting for 89% share of the foreign exchange transactions. So in that sense, the dollar is really still dominant, right? It seems to be really unrivaled in terms of its significance. And so the Chinese yuan is moving its way towards one of the reserve currencies, one of the payment currencies in the sort of the global multipolar, currency system. So we know now, for example, there has been a lot of financial plumbing or infrastructure building to promote the use of yuan in the global economy. And we have seen really fast-paced growth. When you think about, for instance, now, since China introduced the CIPS, that's the China Interbank Payment System, it was introduced in 2015, but by the end of last year, now it's processing $24 trillion worth of value of transactions. And the cross-payment system in China now is over half. It's in the RMB, it's in yuan. So in other words, I think China is able to build a local currency payment system to protect itself from the weaponization of the dollar, but it's also helping to promote cross-border payment efficiency because it doesn't rely on, SWIFT or the US-centered kind of correspondent bank kind of system that is very inefficient. It adds a lot transaction costs. And so I think in that sense, China is moving towards, right, becoming another important currency issuer. I don't think in any sort of short term that Chinese yuan is going to take over the United States, nor I think is the interest of China. But I think what China is trying to build is a local currency payment system to boost the use of RMB in the global currency system and also introduce more channels for foreign investors to hold RMB denominated assets, right? And that's why we see this QFII and Stock Connects and Bond Connects and all these different facilities to allow foreign investors to invest in China in an orderly manner. So I think all these efforts indicate that China does want to boost its RMB and make it a stronger currency in the world stage. It's not really in China's interest, I think, to sort of take over the global currency sort of status. It should be just part of that multipolar currency system.
Thanks, ladies and gentlemen, for your in-depth perspectives. Let's have a short break. Coming back, we'll continue our discussion on the future of safe havens, de-dollarization, and the evolving role of the Renminbi. This is World Today. Stay with us. Welcome back. You're listening to World Today, the panel discussion with me, Anna. We've been talking about a possible multipolar monetary era. Let's continue our discussion. I think Professor Liang touched on something very crucial here, like what she earlier pointed out. Western countries froze hundreds of billions of dollars in Russia's foreign exchange reserves and excluded major Russian banks from the SWIFT system. These were widely seen as clear evidence of the weaponization of the US dollar. Many experts believe against this backdrop, seeking for another stable currency. Also, the internationalization of the renminbi is not necessarily a strategic ambition or against the US dollar, but rather a defensive move toward financial autonomy. So, Professor Chang, what's your assessment on this? And how do you see global expectations for the renminbi?
Right. I think the recent incident, what we're referring to here, is not just about the US dollars is actually accessible by any authority in terms of sanctions, in terms of any irregularities. But I think what the world expecting is stability and liquidity and predictable legal and settlement framework. So I would presume that the practicality attributes to enabling, I echo my colleague talked about a moment ago on transactions, on settlement, invoicing, and not just in terms of reserve. So those accumulations of all these transactions and experiences, if we, from a corporate standpoint perspective, that's parallel with demand for transparency and disclosure. So if we have a predictable framework and able to reduce information asymmetry, and if the currency could able to lower the cost of capital, in this case, if we are referring to whether RMB can be the substitute or the alternative, whether it can help corporate lower their cost of capital, and from the sustainability angle, whether it appeals hinging on the integration of matrices, including, for example, the SFDR and fostering for trust and alignment with the global goals and initiatives. So institutions like legal predictability enforce contracts and reduce all these transaction costs. So RMB, I think it would be more of a reliable alternative, obviously, to the international trade. And all else, if we definitive and the best outcome for the global trade and the global usage of our currency in the global platform.
Then building on that, Mr. Chen, if we take a look at how China approaches renminbi internationalization at the national level, Qiushi Journal recently published an article drawing on President Xi's remarks from early 2024, focusing on the goal of building a strong financial system. Why do you think it came out right at the start of the 15th five-year plan in 2026, and what kind of policy signal does that send?
Well, if we look at China's long-term economic plan, then strengthening the financial market, the financial system, as well as the currency is definitely one of the most important targets. I mean, if we look at China's financial position in the global economy today and compare this financial position, such as the using of renminbi as the trading currency in the global market, etc., what we can find is that China's financial position is weaker compared with China's position with a real economy, such as construction, building of the factory, building of vehicles, even shipbuilding, all these kind of things. I mean, if you look at shipbuilding, China is now building about 70% of the world's large ships at the moment. But the currency of renminbi is still not a very strong currency in the global financial market. This is because it takes time for the global financial market to accept, well, a new kind of currency. This new is not expressed in terms of months or years, but in decades. So it takes a long while for people to accept a relatively new currency that is renminbi compared with currencies such as dollar or pound or yen, these kinds of currencies. But it's for certain that because China's economy is growing stably and we're taking the largest share in the global market, and because China's government has maintained its opening attitude to the world economy in the past few decades. I mean, if you read all the economic papers that China has published in the past almost a half a century, what you can find is that there is never a sign that we should stop ourselves from opening so quickly. We should reserve our opening to the world. There's never a saying like this. So China kept on saying that we are opening to the world for half a century, and we kept on doing this. Recently, what we can see is that the Hainan Island is now fully open to the world. Many countries, I think it's about 180 countries or something like that. Many countries, passengers can now visit Hainan without applying for a visa at all. So if you go to the city recently, you can see all the foreigners on the beaches. So China is opening to the world, and China's economy is growing stronger and stronger. So these are very solid support for China's financial market as well as the currency to become a major and more important currency in the global economy.
Speaking of that, Professor Liang, the article lists a strong currency as the first of 6 key elements of building a financial powerhouse. Do you think that order really matters?
Well, I think a strong currency does make a lot of sense and it is important. But I think we need to read this article both in terms of why China needs to, in a way, hedge itself, right, against this sort of dollar dominance world. And also by promoting strong currency, I think, as Jiahe also mentioned, it will in some ways match, right, China's weight in the global economy when it comes to GDP, when it comes to trade, when it comes to technology, when it comes to manufacturing capacity. I think the next step is to strengthen the yuan. And the other very important point, I think, in this Qiushi paper is really to emphasize the role of finance is to serve the real economy. And I think this is very different than, the way the US sees the role of the currency. So I think fundamentally, finance is in the service of real economy. So a strong currency is, again, to serve, China's the sort of a real economy. And I think that this point needs to be emphasized. And in a way, I think this also really demystified this idea of what is a, sort of financial superpower or what is a reserve currency. I think in the Western media, there's a lot of sensation about once, this paper is released, they were saying, look, China's all along thinking about to displace the dollar, wants to dethrone the dollar. But I really don't think this is what this article is about, right? This article is about to promote the use of RMB. It is to make the RMB as one of the reserve currencies. You realize the wording is a global reserve currency, not the global reserve currency. And I think that really makes a difference. Why? Because again, going back to the shares of, global reserve currencies, you have the dollar on the top, but then you have the euro, you have the yen, you have the pound sterling, you have the Australian dollar, you have Canadian dollar, and you have the yuan, and so on and so forth. So all these in some ways are reserve currencies, right? Not to mention, China's currency is part of the SDR currency basket. So in that sense, I don't think this is anything sort of new. It's not sort of a newly revealed sort of conspiracy that China has been, hiding all along. I think to promote China's RMB uses globally, that was, at least as early was brought up, right, or as early as, especially right after the financial crisis, right, that the concern about dollar, the concern about this sort of dollar dominance system. I think since then, there has been this efforts to promote RMB global uses. So I think that is very clear to speak for China's intention. Now, going back to the point, why I don't think China really wants to be just like the yuan, right? Doesn't want to just be like the dollar. When you look at the academic research, right, they talked about this four sort of currency features that would allow for a currency to become global currency. One is you need to have enough economic weight, which China absolutely does, right? It has 18% global GDP, its trade is now the largest trading nation in the world, and so on and so forth. And second is that you need to have a stable currency. And again, I think China absolutely fits that category. You see the currency stability in China. Then you need to have, these sort of open current capital account, allow for free capital flow. You need to have large liquid sort of financial markets. Now, in that sense, I don't think China is in the interest of opening it up and completely deregulate its capital account, nor does it want to completely financialize its economy, right? I mean, when you look at the Chinese central bank, the Chinese government bonds, right now the outstanding is about 20 trillion compared to the United States, close to 40 trillion. And when you look at the total financial asset, China's about 73, 75 trillion. The US is 141 trillion. So again, the financial size is doubled. The US is doubled the Chinese size. So I don't think China really wants to sort of completely financialize its economy. And so in that sense, I'm not seeing China try to displace the US dollar. And last but not the least, I agree with Jiahe. I think it takes time for a currency to earn credibility in the global market. And there is also a very significant, I would say, a obstacle, which is the so-called network effect, right? So basically the idea is that once a currency becomes dominant, everybody's using it, then it's very difficult for them to stop using it, right? Because everybody's using it, then why not continue to use it? So the kind of network effect would create a lot of inertia. It would really, sustain the dollar's hegemony in the global system. So it will take time for the Chinese currency to gain a lot more significant, prominence in the global stage.
Mm-hmm. The internationalization of the renminbi is not a hegemonic contest aimed at replacing the US dollar, as Professor Liang specifically pointed out that China and the United States view reserve currencies from completely different perspectives. Professor Chang, what's your take on this? Beyond China's economic size and trade volume, does the renminbi have a unique advantage of its own? What non-economic factors could really support its long-term appeal?
Yes, I think my colleagues share their view on how a strong currency should work out. But I think it will also be very important to stress out a strong system of the currency is far more important, because I think depends on the economic cycle, depends on the trade balances and all that. That could depend how strong the currency should be at different cycles. And I do believe that productivity differentials drive real exchange rate, their direction. And what we talking here, China already dominate from the global trade and manufacturing. And I think believe that in terms of the usage and the transactions, by far, I think RMB can perceive as one of the important and core reserve currencies. The system makes it stand out. I think the system itself has to, again, crisis, what we have seen for the past 2 decades, from Asian financial crisis to global financial crisis not a long time ago. So all these would add up. If we have a strong system, I'm sure our central government is working on that, and we are close to be ideal, and that would be more widely used and broadly used by our global trade partners. So I think that attributes to what you're referring to as an important currency system.
Mm-hmm. Mr. Chen, let me stay with the idea for a moment, building on China and the United States approach, how they think about the reserve currency from very different angles. The article also talks about China's financial culture, integrity, responsibility, and prudence. How can those values turn into real trust from the international community on Chinese yuan?
Well, I think people are trusting your currency. It's basically, well, you might say that okay, they like your culture, they like your you like your attitude, all these kinds of things. But if we look at the history, the financial market is always a very, well, I would say a very logical place. So if you want people to trust your currency, it takes a few things. You have to get a very good and strong economy. You have to have a very open attitude. And as Professor Liang has just said, you need a long time for people to believe this, because in the financial market, trust is a very important thing. I mean, and trust takes long time for people to build. You can build trust over 3 decades, 5 decades, or a century, but also you can destroy that within just 1 year if you try to grab Greenland now. So I would again quote this action of Trump at the recent months. So for RMB is that China's economy is now the second largest in the world, and it is still growing, and we can see that the trust is continuously being built up. People are now having more and more trusting to China's economy, to China's open attitude to the world, to the stability of China's markets. And if we go into the future, if we want to win the trust from global financial market to China's financial market, to China's currency, to China's equity market, that just takes more time. So I would say maybe we wait for another 1 or 2 decades, we can see a more prosperous financial market and the currency of China compared with today.
Mm-hmm. Professor Liang, would you like weigh on this? In a de-dollarizing world, could the RMB position itself as a non-weaponized, non-politicized financial public good?
Well, I think so, because we know that China's track record, right? I mean, in terms of upholding multilateral rule, and using negotiations and talks to settle any disagreements. I think we have been seeing this, especially when Trump is erecting these unilateral tariffs, but China is negotiating with EU, with Canada, with ASEAN countries to build this multilateral trading system. So I think it's clear that China is supporting, multilateral system when it comes to trade, when it comes to investment, and so on. So I think that China is credible as a sort of a responsible player, right, in this sort of multilateral system. Now, in terms of boosting the trust in yuan, I agree with Professor Chang that the sort of rule of law, transparency, openness, these are all very important. And of course, the stability of yuan, I think this is also important, right? As well as I think in terms of financial markets, trust in the yuan, it has to do with also sensible fiscal policies, monetary policies, avoid any sort of so-called debasements. And again, China has set up the track record, right? That the inflation rate in China has been so stable. As a matter of fact, I think, the government's trying hard to reflate the economy, as a matter of fact, right? So in other words, you're not likely to see inflation to erode the value of yuan. And in terms of exchange rate, again, China's exchange rate has been so stable that I think nowadays there are actually the argument for China to appreciate its currency, drastically by 50% or whatnot in a few years. I don't think China is going to do that. I think China will continue to maintain exchange rate stability, with the central bank fixing. So I think when you look at track record, it does seem that China is a responsible player, that the world can trust China to invest in China, but also to purchase yuan-denominated assets. And I would also say it is actually in China's interest to do that, right? There's no reason why China wants to harm its own credibility. It's not, again, like the United States that sees globalization, it's creating damages or victimizing the US economy. China has always been consistent and openly agreed that globalization, internationalization, has benefited China. So I think, China's interest is to maintain the kinds of track record, to be reliable and responsible player in the multilateral system, including the currency system.
Professor Liang, let's take a step further. Actually, we've already hinted this point earlier during our discussion. Some people say the digital RMB could be China's chance to leapfrog in RMB internationalization. Do you agree with that? And what's the biggest challenge there?
Yeah, I definitely think the ECNY, right, the central bank digital currency, is a very potent, I think, technology to enable and to facilitate the internationalization of RMB. So I think, the Chinese government has been talking about this two-wind system, right? On the one hand, it will promote the e-currency's uses domestically. And on the other hand, it will try to create a more sort of a digital ecosystem, right, to allow China to utilize the digital RMB. There are many different reasons why this is helpful and beneficial for China, right? For one is when you have a digital currency, it really reduces a lot of transaction cost, that you're able to build your own digital system, right, with the crypto or with the sort of the digital tokens, right, to use the blockchain technology to facilitate the kind of transactions across the border. And you can also, utilize these kinds of distributed ledger system. So then countries can trade their currencies immediately and without any sort of barriers in the same platform. So I think the Ambridge, which is it's such a system that China was experimenting, with the BIS, with Hong Kong, with the UAE, and with the Saudi Arabia. The central banks are trying to establish this kind of digital platform to allow their currencies to be freely traded. So I think this is an example that digitalization of the RMB would be really helpful to build a kind of international digital network and to be able to have this digital payment system. And the other, of course, the main development is also amongst the BRICS, right? The BRICS countries would also want to build this kind of local currency settlement system, right? The payment system in the local currency. So again, this will need to utilize the kinds of digital currency system to allow these transactions to go through. Not to mention, again, there's a lot of benefits in terms of, reducing the transaction cost, reducing the reliance on SWIFT and the dollar-centered payment system. So I think this technology is definitely, instrumental in promoting both domestic uses of the RMB digitally. And again, there are transaction efficiency improvements. There's also, I think, help to boost the efficiency of monetary policy. And also globally, right? That's going to help to build this payment system with countries to, again, promote the uses of RMB globally.
Professor Chang, how do you assess the idea that the digital RMB could be China's chance to fast-track the internationalization of the currency?
Yes, I think surely the RMB currencies, we have the competitiveness. So apart from what we discussed earlier in other subtopics, I think that digital RMB can reduce settlement friction, enable programmable cross-border flows. But we also need to resolve a bit more in detail, for example, any privacy and governance concerns, not just from the angle of the supply side, but also from the demand side. I think the incumbent network really needs to hurdle that, and technologies could help. So institutional alignments determine whether it is going to be a success. So we need not just the public side, but also the private. So we need public-private participations on this. So from the angle, enhancing this through fintech valuation, whether the network externalities can reduce and highlight the potential and then meet the reduced agency problem. So all these could benefit, and digital RMB could support that. Furthermore, I think sustainability, for example, referring to the SDG 9, that I think there are challenges from where privacy concerns. We must address that, and that would contribute to the equitable access to everyone. So all in all, I think I support the view that digital RMB would foster on all these development, and it could enhance from the public side to the private.
Mm-hmm. Mr. Chen, do you agree with assessments that the digital RMB offers China an opportunity to leapfrog in the process of RMB internationalization?
Well, I would say the digital currency is an innovation. That's for sure. I mean, people are expecting quite a lot from this revolution of the currency. But if you look at global currency right now, actually most of the transactions are already digital. I mean, if I transfer like $1,000 to United States, I don't bring the note to the United States. I type on the computer and there is some digital signal going on. So I would say currently, if you look at the global financial system, it's not that far away from a fully digitalized currency system. And if we talk about how strong a currency could be in the long term, I mean years or decades, it doesn't matter whether this currency is in paper, in digital, or even in coin. It doesn't matter. What's actually behind this is the strength of the country's economy, the stability of its economy, and its opening attitude and connection to the world. So I would say that most of the confidence of the renminbi in the future actually comes from these areas. It comes from a strong Chinese economy, comes from the fact that China's factories and manufacturers can provide the best products to the global consumers, that people love Chinese products at good qualities as well as good prices. Regarding whether it's a digital currency or the money sent from the financial system or whichever that is, it's probably a plus, because if you enter into an innovation, you have something that it doesn't offer to you from the old time. But if you talk about the overall picture, the most important thing is still the strength of the economy and the opening attitude of the economy.
Thanks, Mr. Chen. Thanks to all of our panelists for those valuable insights. Liang, Professor of Economics at Willamette University. Chang, Associate Professor of Practice in Finance at the University of Hong Kong. Chen Jiahe, Chief Investment Officer at Novem Technologies. That's all the time for this edition of World Today. To listen to this episode again or to catch up on previous episodes, you can download our podcast by searching World Today, or you can find us on X. It's CGTN Radio. I'm Anna. Thank you so much for listening. Bye for now.